Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, let's take a look again on the Forex market, as usual in euro currency. So here you can see that market hasn't shown any significant changes, so it's still floating around an area that we have said, keeping in tension all traders, especially bulls who have taken long position here. So it's still calling around the bottom of the left arm as well. From this standpoint, nothing has changed, so we still stand at the result near support, keeping harmonic shape of this head and shoulders, and everything will depend on the next move. So as we said, this is actually a vital area for the bullish context. If we will see that market will start dropping here back to the 106.8 area, it means that head and shoulders is in the stage of the failure and we're going to the 106 area. Conversely, if we will get some success here, market starts upward action, everything does great. So we're getting with this head and shoulders start moving. Later we will move our stops to the break-even and see what will happen. Obviously, currently nobody will take additional risk, just will be waiting for the CPI numbers today and the Fed meeting. Also, I would like to show you a few interesting charts. So first, futures on euro currency, because you will not see it on the weekly chart of retail broker, but here you can see that market is flirting with the MACD. So this is precisely the scenario that we're discussing in a weekly report. As we said, if you remember, we calculated the break-even point for MACD on the futures at 40 pips higher than on the spot market. It is normal because here is some difference between the interest rates stand. And you can see, and we said that let's keep watching what will happen if markets start flirting with the MACD and we will get the bullish grabber. From that standpoint, it might be really great background, additional background for our hand shoulders pattern, right, and other bullish moments that we have. So yes, the market was standing slightly higher than MACD, today it's slightly lower, but everything anyway will be determined by the end of the week, so where the Friday will close. So today's session, as you understand, could bring really big shifts to the market. Another few charts, actually, this is dollar index and 10-year bonds. Not the per se dollar index and United States Treasury, but how they stand together. It seems that some market is moving in the wrong direction, because take a look that here we have some rising on the United States dollar. And so take a look on the daily chart, it will be better. Right, so we have some upward action. But on the 10-year bonds, we see that yields are dropping, slightly decreasing. So this is not harmonic, and usually they should move in the same direction. So when the dollar is rising, yields usually also are rising. Here we have some divergence, and it means that somewhere some change should come. Maybe by the same reason we will get some solution on euro currency as well. On the lower time frame, yesterday we also said that if you would like to take position with a fine tuning and you are patient enough, you could keep an eye on possible pattern to be formed. And the pattern that theoretically might be formed here is the 3 drive-by. So you can see that with this performance we'll get 127 extension of the first swing, and next will be 1618. It's around 107 or 6. We have the divergence. So that's particular, the pattern might be the pattern which could trigger the upward action, because we have the same reasons to suggest that probably market could show upward action, just because gap is unclosed and bullish patterns are still potentially valid, so the potentially could start working. But this is only in theory, so how it will be in reality, well, difficult to say, because actually, as you understand, Jerome Powell could break any technical background. So currently it seems so that this will be nice, interesting pattern to watch for. But it also could happen that we will get just direct upward continuation if it will be corresponding comments from the Fed and corresponding CPI numbers. This also might happen. Another pattern that theoretically we could get instead of the free drive is 127 hand shoulders. This will happen if market will return right back up very fast, and that might be the shoulder head. Market could start forming another shoulder here, maybe smaller one, depending on what data we will get, and then we also could get the upward continuation. So other words speaking, those of you who are still watching for possible patterns before taking the position, this is just few that you could keep an eye on. Maybe one of them still will be formed. Those who already have taken position yesterday, as we said, so if you trade on a daily, weekly basis, theoretically you could consider taking the long position here, could wait for some pullback. So probably you have stepped in somewhere around 107.48. You should do nothing, so just keep your stop loss order in place and wait when the major data will be released. Currently everything will depend on actually how hand shoulders will manifest itself. That's actually all that we have. Let's just wait for a few hours. We will get probably some results.